Welcome back. Markets are still on edge after a big two-day drop last week. The Dean of Valuation, Aswath Damodaran of NYU Stern School of Business, joins us now to discuss. Let me just get your take on what we've all been going through for the last handful of days and what you think about these markets.
You know, it feels like the beginning of a shakedown. I mean, I remember crises past, and the first shock is not always the end shock. There are aftershocks, as you saw today. While I've been waiting here, the Dow swung 150 points in either direction. And I remember, weeks like these after 2008 and 2020, where the market can't find a steady state. And I think that the potential for these tariffs to create long-term effects on the economy is such that you can't say the market's panicking for nothing. There's a real reason markets are reacting the way they are. And until we get some sense of what steady state looks like, this looks more like a markdown of equities than panic selling to me.
I'm wondering, from all the markets that you've seen and the way you study them, whether you look at a market downturn differently when you have something as unprecedented, I think, as you've had now, where you've had, as I've said, a self-inflicted crisis from the White House, from the very hand of the president himself, which has caused this level of market upset, versus something over a period of time that just crops up and becomes an issue that the market gets concerned about. The unwind of the carry trade back in August, for example. Yeah, that felt pretty bad, and the market looked bad for a bit. Do you judge the two differently?
No, I think, COVID was unprecedented. We've never seen anything like that. The collapse of it's not that it's unprecedented, but that it has the potential to change the global economy long term. I think that's what sets us apart from COVID, is this could change both the size of the global economic pie and who gets which slice, which is one reason I think it's tougher to call this than another crisis. You don't know how this whole process is going to play out. Because I wouldn't be so quick to judge the market and say, hey, the market's just overreacting. There is real change coming, and the market is trying to price in that real change.
But that's the great unknown. I mean, if they believe that they're trying to reset the global economy, and let's just take that at face value, and we say, okay, I buy that. You're going to have higher costs here in the U.S. to produce goods. You're going to have higher wages paid to the workers to produce those goods. You may not have the pricing power you once did. So therefore, your margins are never going to be what they once were. Thus, your earnings are going to be reset lower. Thus, the market multiple, I would assume, must have to be corrected lower, too.
And you know what? The White House may be okay with that, because from what I've heard in the last 5 to 7, it looks like the end game for the White House is not so much what equity markets will do, but what the slice of the pie is that the rest. I mean, let's face it, for 40 years, the slice of the overall pie that equity investors got larger and larger. And it created consequences. And I think in many ways, I'm not sure the White House cares that much about the market slice of the pie. If some other group that they feel is, waited a long time gets a slice of the pie that's larger than it used to be. So that's what makes it feel different. Usually in a crisis, the Secretary of the Treasury is out there trying to calm markets down and, essentially soothe fears. This seems to be the exact opposite. So I'm not sure what the end game here is. And it's clearly keeping the equity market going up doesn't seem to be on the top 5 list of things that the White House is concerned about right now. And if you're a player in the market, that is a problem for you, because you're no longer on the top of the list as somebody they care about.
I get it, but what is the slice of that pie? Making a widget for a low wage in a factory that's suddenly brought back to the United States?
That's the real end game, is how much smaller will the pie get? Because the global pie will get smaller. If you make global trade more difficult, the global economic pie will get smaller. And the U.S. as the largest player in that market will also see a smaller pie. a less robust economy in terms of who'll get which slice, I'm not sure that anybody's going to get a slice bigger than the slice today at the end of the process. But the White House seems to believe otherwise.